Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, it's Dan back in action. Appreciate you guys giving James a warm welcome. It's his couple days into making his videos, and it's certainly only going to get better. You guys should check out my videos from a year and a few months ago, and it's pretty astounding how terrible they are. But anyways, keep giving him feedback. He definitely likes it and is trying to find his groove, and he'll get there quickly. And we'll certainly be utilizing multiple different perspectives of analysis. And the good thing about him and I working together is we don't compare our analysis. I don't watch his videos. He doesn't watch mine in terms of what we're expecting for the outlook. So we try and remain as unbiased from each other as we can. And you're really getting two different perspectives here. He's going to continue doing videos Monday through Thursday, and I'm going to do them over the weekend. So on the dollar here, a very clear resistance level where we had the top of this bull move on the daily time frame, and that was up at 102.26. We consolidated, we formed support at 101.22, and then we headed back up and we hit that same level by 1 penny and rejected. So let's look at that on the hourly time frame. We were watching that resistance level, and there it is. Hit our top at 102.26, our lower high by 1 penny at 102.25, and then a pretty severe pullback. I had a downtrend resistance line I was watching, and then we had the all-out dump today, and that all-out dump obviously benefiting gold and the bull miners to the upside. Now, where we stand here on the daily time frame is this key support level of 101.22. We did break it, but only by 5 pennies, and that's because we hit that with the hourly RSI oversold. So this support is still holding as far as I'm concerned. 5 cents is enough wiggle room where I can still count that as holding. But the bears really want to see another leg to the downside, and what that would do is show a step backwards. So here we have that resistance where we pulled back on the rejection to here, and if we reject from the same resistance and pull back even further, that obviously shows that the bears have some momentum. So we are going to be heading into Sunday night and Monday morning looking for a short-term, the gold bulls are going to be looking for a short-term bounce here on the dollar, cool off these RSI levels, and that's already begun here to the end of the day on Friday. But they want to see a cool it off and then a lower high and then a dump and lose that level more significantly. If we do break that level more significantly after the low we've seen now of 101.17, we're looking down really in the upper $100 range. I would be looking at 187 and 178. So that would be the ideal scenario for the bears. And in my past videos, I have been drawing this bearish reversal head and shoulders pattern. And it is still possible. It would be a little bit of a weird looking right shoulder, a little bit longer and drawn out. But the top here was not too much higher than the left shoulder. So it is still possible. Again, I'm not going to be making any trades based off of this. It's just something that I have my eye on. And I know that if we were to head back down to these mid 99s, we have a very, very key support level that would be tested. So keeping an eye on it, not making any trades based off of that. And let's now look at how we've been playing out the past couple of days, because gold has been very weak. And what has stood out to me for gold is the closes at the low of the day. Look at the past 4 days with the lack of the lower wick. That shows no bounces. That shows a close at the low, bears in full control, and all the momentum pointing to the downside. Now, we started to notice this change with the correlation to the miners, where look at the miners here building a base of support. And although we did see a little bit of the lower low pattern, it was not anywhere near as significant as what gold continued to do to the downside. So we had multiple days in a row on Wednesday, Thursday, In the morning, we were looking for bullish moves to the upside on the miners, and we did get them. They were short-lived. You can see the upper wick showing profit taking by the end of the day, but the bulls started in control in the morning, and even though gold continued to show weakness, we could see that these miners were just waiting, and we were almost just sitting there saying, okay, if gold can just get its act together, these miners are ready to go. And gold never did get its act together on Wednesday and Thursday. There were some short-term trading opportunities for the bulls, but nothing that we would ever want to swing overnight. Not enough confidence there. So what I was continuing to watch on both the senior and the junior bull miners was the continuation of this lower high pattern. And I'm seeing lower high day after day after day after day, and it ended up being 10 days in a row with lower highs. So that's the signal that I'm looking for. I'm looking to break that bearish pattern, and as soon as we break that lower high pattern, I'm confident enough to go bullish in these miners, set my stop loss below the lowest prices that we've seen recently, and then be looking for this bounce to play out. And it's an oversold bounce at this point. The RSI on the daily time frame dipped below 30. So we got a bull break here. Look at the volume. Bear volume was drying up. That was another signal as we were building this base, seeing the ranges shrink, and not seeing the downside momentum correlation with gold continue. We saw the volume dropping off, and that volume dropping off on a downtrend indicates that the bears are running out of steam to the downside. And then that spike in bull volume, bullish reversal candlestick, and we're going to be looking for some follow through into early next week. So this was a really nice trade, and we were looking for the bulls to stay strong into the afternoon. And one thing that I was looking at, I was asked at about 1 p.m. Eastern, what trades I'm looking at heading into the end of the day, and it was bull miners. I was looking at these bull miners because I really liked the price action on those bull miners, and I came here and I looked at gold on the 15-minute time frame, and I saw that we were seeing clear resistance right about 1203. So I said to myself, okay, if we're seeing the bull miners hold up well and we're seeing gold stagnant here trading straight across, if gold gets this break of 1203 and breaks this range to the upside, that's going to give these bull miners one last kick to the upside heading into the end of the day. And that is what ended up playing out. And those bull miners saw an even much more magnified move to the upside with a big time bull break into the end of the day. So let's look at these individual names. What this did on the weekly time frame, today saved this weekly chart. Look at GDX. The 200-day moving average, or I should say the 200-week, held last week. 2171, we held it this week as well. This is a bullish reversal hammer. So we held the 200-week moving average support 2 weeks in a row. We formed a bullish reversal candlestick. And if we can see some upside next week and a green week, we will confirm this for the bulls after a month of pullback. We have the FOMC on Wednesday. The market, in my opinion, is pricing in a rate hike already. This dump really got going once the odds of a rate hike in March started significantly increasing. So this gives us a couple scenarios. Number one, if we get a rate hike, it's mostly priced in, and I don't think we're going to see a lot of downside on these bull miners nor in gold because, like I said, the market is anticipating a rate hike. It is a lot more likely to happen than not likely. Scenario number two, we don't get a rate hike, and the bull miners and gold are going to react very bullish, in my opinion, because the market is going to make up for all of this adjustment that it's been doing, and it would be incorrect in this adjustment, and the market would try and recover that and try and even things out after being wrong. So we're going to have to be watching very close heading into Wednesday, but I do like the nice momentum we had into the end of the day here today. GDXJ, even a stronger close up near the high of the day. Look at the volume in the bears the last 2 days compared to the bull volume here today. That is very significant. So a big time bull move, taking out 3 days of downside in one bull move today. Same thing, building the base of support. So this shows it a little bit more clearly. Look at the low of the day, March 7th. 3266, and then we formed higher lows compared to that day the next 2 days. So Tuesday was the low of the week, higher on Wednesday and Thursday. And you look at gold on the daily time frame, and where was gold at that same time? It just continued to dump to lower lows. And even today, we hit the lowest price of this pullback. So again, that's what stood out to me. The fact that GDXJ is forming a higher low compared to the low of Tuesday, whereas gold, the low of Tuesday, was down at 1214, and we ended up pulling back $20 more with GDXJ not hitting lower lows. That is a very clear change in the correlation to favor the bull miners, just waiting for the gold bulls to show up. We got it in a big way here today. Bullish reversal candlestick on the weekly time frame. You could make the argument that's a bullish reversal dragonfly doji, or if you wanted to stick to the exact definitions, which I do not, it would be a bullish reversal hammer. So need a green week next week to confirm it back to the upside. And again, best case scenario heading into today for the bull miners is pretty much what they got. And we're going to be watching very close next week for what kind of follow through we get on Monday. And we know what we want on the dollar for these bull miners. We're going to see a small oversold bounce on the hourly and then a drop to lower lows, breaking 101.17. So thanks for tuning in. Appreciate you watching. Hope you have a great weekend. We will see you soon.